All right, today we're tackling an institution that's been around for over 3 centuries, but is somehow more important right now than ever before, Lloyd's of London. Now, you've probably heard the name, but how it actually works and why it's so vital to our modern world, well, that's a fascinating story. So let's get into it.
And this quote from the chairman of Lloyd's, it just hits the nail on the head. He says we can't see risks in isolation anymore. And he's right. Think about it. Pandemics, supply chain chaos, a problem that starts in one part of the world rarely stays there. It really is an interwoven web. And that is the exact problem Lloyd's was built to solve.
So how in the world do you manage a modern web of risks like that? Well, the answer, believe it or not, comes from an idea that started way back in 1688 in a London coffee shop. It's an idea that makes everything from building a skyscraper to launching a satellite even possible. So what is this powerful, centuries-old concept?
Well, it all comes down to Lloyd's core mission. And here's the thing, they don't see themselves as just an insurance company. No, they see themselves as something much, much bigger, an enabler of progress, of human ambition.
Here it is, their official purpose: sharing risk to create a braver world. Now just think about that for a second. When people or companies or even entire nations can protect themselves from a catastrophic loss, what happens? They're free to innovate, to build, to explore. They can make bolder decisions. So this isn't just about bouncing back after something goes wrong. It's about having the confidence to leap forward in the first place. And you can see how that idea has evolved. I mean, it started with merchants and ship owners huddled in a coffee house, ensuring sea voyages. Fast forward to today, and it's the global hub for tackling the most complex risks you can imagine, from cyber attacks to, yes, pandemics. The core principle is exactly the same, but the scale is now completely global.
Okay, so how does this thing actually work? What makes Lloyd's so different is that it's not one single giant insurance company. It's a market, like a real, bustling marketplace where the product being bought and sold is risk. So, let's say you need to insure something incredibly complicated and expensive, like a brand new wind farm in a hurricane zone. You can't just go online and get a quote for that. Instead, a specialized broker brings that risk into the Lloyd's marketplace. They then shop it around to different syndicates, which are teams with deep expertise in things like engineering or weather patterns. And here's the magic. No single syndicate has to take on that entire massive risk. Instead, a bunch of them agree to cover a piece of it, until, piece by piece, the whole thing is 100% insured.
So, what exactly is a syndicate? Well, you can think of them as individual expert teams inside this giant market. Each one is basically its own little insurance business that specializes in very specific, very particular types of risk. Could be anything from satellites to fine art.
And a natural next question is, where do these syndicates get the money to pay claims? That's where the members come in. As you see here, these are the individuals and the corporations who provide the actual capital, the funds that allow the syndicates to operate and write those policies. They are the ultimate financial backers for the entire market.
Okay, so it's a really clever and complex system. But is it working? Is it healthy? Let's take a look at the 2021 scorecard to see how the market is actually doing financially.
Wow, okay, this slide tells a huge story. Look at that turnaround. After a pretty big loss in 2020, driven mostly by the COVID-19 pandemic, Lloyd's bounced back in a major way, posting a £2.3 billion profit in 2021. This shows you that the market is built to absorb massive global shocks and recover.
Now, this number here, 93.5%, is super important. It's the combined ratio. The easiest way to think about it is like a business's core operating health. If that number is below 100%, it means you're making more money from premiums than you're paying out in claims and expenses. So, a 93.5% shows that Lloyd's fundamental business of insuring risk was really healthy and strong.
And finally, this number, 388%. That is the solvency ratio. It's basically a stress test, a measure of the market's ability to pay all its claims. A regulator might require you to have a ratio of, say, 100%. At 388%, Lloyd's has an incredibly strong capital position. It signals they have more than enough financial firepower to make good on their promises, even in the worst-case scenarios.
So, the finances are looking good. What's next for this 330-year-old market? Well, Lloyd's has laid out a really clear blueprint for its future, and it's built on 4 key priorities.
And these 4 things aren't just corporate buzzwords, they are a direct game plan for the modern world. Performance is all about keeping that financial discipline we just saw. Digitalization, with a huge project called Blueprint 2, is about finally dragging a traditionally paper-based market into the digital age to make it faster, better, and cheaper. Culture is a direct response to some past criticisms, aiming to make Lloyd's a more inclusive place to work. And finally, purpose. For an insurer of global industry, systemic risks like climate change aren't just an idea, they are the future of claims. So putting ESG and a net zero goal at the heart of the business isn't just a nice to have, it's a strategic must.
And part of that focus on culture means looking backwards to move forwards. It involves confronting its own difficult history. After apologizing for its role in the transatlantic slave trade, Lloyd's is now actively funding research into its own archives to understand and expose those historical links, which is a really critical step in building that more inclusive future. Okay, let's pull all of this together. We've looked at the history, how it works, the performance, the future plan, but the big question is, why does any of this matter more than ever right now?
Just listen to what the CEO of Lloyd's, John Neal, has to say about this moment. We are living through a period of heightened risk. The level of global danger we're facing, from wars to climate change, is at its highest point in generations. And in a world this volatile, sharing risk isn't just some financial trick, it's a fundamental piece of global stability.
So if there's one thing to take away from all this, it's this. Lloyd's acts as an engine room for confidence. By creating a place to pool and share the world's biggest, scariest risks, it gives businesses and whole societies the assurance they need to keep moving forward, even when the future looks really uncertain.
And that kind of leaves us with one final thought. In an age where every major threat we face, every single one, crosses borders and affects us all, maybe that simple old idea from that London coffee shop is actually the most radical one we've got. In the face of all this uncertainty, perhaps the bravest thing we can possibly do is simply to share the risk.